If you are watching this video, so you must be a first time home buyer, and if you are not, so you can actually watch this video and send this video to somebody else who's looking to buy their first home in Ontario. So we're going to be discussing actually government's 4 program that can help the first time home buyers. So I have a Sukhpreet with me to help me with this podcast, and we're going to be discussing actually thoroughly these 4 programs. So let me introduce Sukh. Let's start with a little bit of introduction. Sukh, if you can introduce yourself.
Thank you, Mavi, having me on this. My name is Sukhpreet Kaur, and I'm working as a real estate agent since 2015 with Remax, and I'm here to discuss about the government plans which are associated with the first-time home buyers in Ontario. So we have 4 plans which we are discussing today, and the first one is the Ontario First-Time Home Buyer Incentive. The second one is the land transfer tax refund for the first-time home buyers. The third one is the home buyers plan. Last but not least is the GST HST housing rebate.
Sounds good. And we're gonna start with the first one. The first one is a first-time home buyers incentive. So if you wanna, discuss in further, like if you can tell us like what exactly this plan is, and then how does it work?
Yes, I would definitely elaborate this one with what the plan is and its eligibility, how it works, and what are the modes of repayment of these plans. Before we start, I would like to let you know that this Ontario First-Time Homebuyer Plan incentive is a shared equity mortgage program which provides up to 5% of the purchase price of an existing home and up to 10% of the purchase price of an newly built home.
As of like down payment?
Yes, it is a kind of down payment. It's a part of the down payment, and it is a kind of interest-free loan, which has been provided by the government.
So what exactly it is like? So government gives you 5 to 10%, depends like if you buy a resale or a first time, like a new built house. So government gives you 5 to 10%. That is tax-free.
Yes. So it is a secured loan by a shared equity mortgage program, which means that the government will own a portion of the property until you sell your home. Yes.
So if you don't sell it, then there's no problem with any sort of equity that you have to make the payments or sort of the.
You're not going to make any partial payments in this one. You have a time frame of 25 years as the amortization period of your mortgage, and also you can make a payment once you sell your home.
So once you sell your home. Okay, sounds good. And what kind of eligibility do people require to qualify for this program?
It's a very good question. The eligibility is basically your total annual income qualifying should not exceed 120,000 out of it. And you can extend your 120,000 to 150,000 if and only if you're buying your home in Vancouver, Victoria, or Toronto.
So let's say if I'm making less than $120,000 a year, so I can qualify for this program.
Yes, you are eligible for this program, and your total borrowing is no more than 4 times of your annual income.
So which is like standard requirement for any mortgage program, right?
Yes, absolutely. And you and your partner is a first-time home buyer. You must be a Canadian citizen, permanent resident, or a non-permanent resident, as long as you are authorized to work in Canada.
So let's say even if I'm on a work permit or I have refugee status, like which is kind of comes on with the same terms. So as long as I'm working full time and making those tax payments towards the government, and then making those tax files, and then I can get I can be qualified for like as long as I'm making that income, right?
Yes, as long as you have a valid work permit.
Work permit.
Yes, and the most important part of the eligibility is that you should have a minimum of 5% down payment requirement, which has traditional funds in your bank account. It could be your savings, it could be your RRSPs, or it could be a non-repayable of gift certificate from any of your relative or from an immediate family member.
No, that sounds really good. And how does it actually work?
Well, your home should be a primary residence for you. You can't use this incentive for your investment. Doesn't matter if you are a first-time buyer, but you have to have that house as a primary residence. And the second is there is no ongoing payments which you have to make. There is no partial payments. There is I would say there is no interest you are bearing on that loan. So you can make a payment when you are going to sell your home, or any time in the middle of it without giving any penalty on it.
So there's no penalty
No
if I sell
penalty
like
on
in the middle. So I don't have to like just live in the house for 25 years.
No, you don't need to.
Yeah.
As long as you're going to sell your home, you're going to have to make payment to the government plan. That's
Okay.
all.
And if I never sell the house, then I
That's a
can
good
keep
one.
the money.
Yes.
Right. So basically, like with
Then
my
if you're not going
understanding,
to sell your home, then you have to make a payment after 25
after
years.
25 years,
Yes.
I can refinance them and pay them back.
Yes,
Right?
you can
So,
do that.
but I mean, if I simply understand that like government helps you with the 5 to 10%, if you are making less than $120,000 in Ontario, and they can give you up to 5%, or if you buy a new house, then 10%, as long as you are a permanent resident, or you are a Canadian citizen, or you have either valid work permit, right? And then as long as you have like 5% down payment that is sitting in your bank, then you can qualify for this program. And
Yes.
then the government can give you up to 5 to 10% of their purchase price as of like down payment, and then it's tax free and it's interest free.
Yes, absolutely. But I would like to add one more thing into this, that the repayment amount is based on the fair market value of your home. If the market value is higher in that time when you are selling it, then you have to make a portion of the payment of that amount in that terms. You're not making a payment of whatever you have received. Let's suppose you have received only $5,000 for the sake of an example, and you're not paying it as $5,000 in return. If the market value is way more higher than what you have bought it for,
Yeah.
then you have to make a payment of.
Let's say, for example, if I bought my house for $500,000 and I took 5%, for 5%, 500,000, and now my house, like after 4 or 5 years, worth like $800,000. So that 5% is of
Increased.
$800,000,
Yes,
right?
yes, you're making a payment of 800,000 of 5%.
Which is I feel like it's a really good plan.
It is a good
Yeah.
plan as long as
And you don't have to make the payments, and there's no interest that bank
Yes.
is charging, or like the government is charging you on that
Yes.
amount, right?
yes, there is no interest on it. Yeah,
This
it's
is a little bit
interest-free.
lottery that you can
Yes,
get
absolutely.
for 5 to 10%.
Yes.
Right. Any other kind of segment on that plan that we need to discuss?
I think we just need to, consider certain points before we are going to apply for this program.
Yeah.
We need to go through from all the terms and conditions.
Yeah.
So we should not even regret after having that on.
Yeah. So is there any heavy condition on this program that you think that is really hard to qualify for any average person?
There is no such heavy condition we are considering on this one. The only thing is you should have, as I have mentioned earlier, that you should not exceed your $120,000 of annual income in it.
Yeah. So try to make less money, guys.
Yes.
That's the only way you're gonna get some incentives.
Yes.
All right. And so we are moving forward. Is there anything that we want to discuss on this point, or we should move on to the
I
next
think
one?
we should move to the next point right
All right.
now.
So guys, next one is the land transfer tax. So land transfer tax means like when you have a piece of land, anytime you pass that piece of land from one person to another person, the government collects a tax on that transaction. So either like you're buying or selling the land, or somebody who owned the land, he passed away or she passed away, and then now it's time to pass the land to their kids. So that time they collect the land transfer tax, right? In that sake. But the government says like if you are a first time home buyer and you get an incentive of $4,000 as a first time home buyer, which means you get $4,000 back. So how does it work? So let's discuss first how does the land transfer tax actually is calculated. Right. So basically, if you own a piece of land, basically it associates with the value of the land. Plus, if you have some sort of mortgage amount on that land, right? So if I want to give you numbers, so basically, if the value of the land is like $55,000, then they charge like 0.5%, like 0.5%. If it goes from 55,000 to $250,000, that it goes up to 1%.
1%, yes.
After $250,000 to $400,000, it goes up to 1.5%, and then after on $400,000, it goes up to 2% unless you reach $2 million. So if you reach $2 million, then you have to pay 2.5% of land transfer tax. So this is how they calculate the number, just for sake. And if you're a first time home buyer, so you get like $4,000 back.
And there is also part of it, if let's suppose you forgot to claim that $4,000 on your land transfer tax, you can always file it to get it back.
So how do you claim on it? So first thing is, like, when you're doing the transaction, you tell your lawyer that you are a first time home buyer. So they deduct, like, if you were supposed to pay $10,000 to the government as of land transfer tax, so they deduct $4,000 and then you pay only $6,000. And if you forgot to mention to the lawyer at that time, like when they were closing the transaction, so then you can do like you can file it after a certain time, whenever you want to file it, and then you can go to ministry and then file with them, and then they usually have the form that you can fill it out and then submit it, and then you get the rebate afterwards, right?
Absolutely.
And moving forward on the third one, we have home buyers plan, and I would recommend Sukhpreet to further discuss. I know she has this big file, you know how girls work.
Yes, for sure.
So
the home buyer plan is also one of the incentive which we are considering right now. Is it's a Canadian federal government plan in which allows you to withdraw a form of money from your RRSPs, and you can use that amount to buy a qualifying home or for yourself or for any of the relative with the disability.
Okay.
Yeah, you can. I mean, it's not relatively be a relative only. It could be any person related to the disability. You can just get the plan out and then just help them to making a home by withdrawing the funds from your RRSP.
Okay, so basically whatever the funds you have in RRSPs, you can withdraw that as for the down payment.
Yes.
And you don't pay tax on that one, if I'm understanding correctly.
Yes.
Okay, perfect. All right, so this is the plan, guys. So you can put the money in RRSPs and then get the money out of RRSPs and pay for the down payment, and then you save taxes on that part. And what are the eligibilities on that?
The eligibility is somehow very similar to the one which we have discussed before for the Ontario Incentive Home Plan. You must be a first-time home buyer, and you should not have the home from the last 4 years if you wanted to get eligible to withdraw that amount of money from it. And you and your spouse both should be Canadian resident or a permanent resident. And another thing is you withdraw your funds. Let's suppose you and your spouse both are first-time home buyers. You can individually withdraw $35,000 up to from your RRSPs, which is the total of $70,000 to contribute towards your down payment.
Okay, 100%. And how long it takes you to repay for that?
It takes like 15. It's a 15-year period to make a repayment of it, and you can make a partial payments as well. And it's one.
Is it like mandatory? Like you have to pay like every month, or you can skip it too, and then you'll be fine?
Well, how it works is you have to start making payments from the second year of.
Once you buy the house.
Once you buy the home, it's the second year of the when you withdraw the funds out of it. So it actually means, let's suppose you have withdraw your funds in 2023 and you're eligible to start making payments from 2025. And another thing which I want to add on is you have to make a payment every year is 1/15 of your total amount, whatever you have withdrawn from your HBP plan.
I think you can only maximize, you can take out the money up to $70,000 if you're like husband and wife.
Husband and wife, yes.
Okay, sounds good. And before we move on to the other plan, that is GST HST credits rebate, I wanted to discuss, want to touch up on the land transfer tax refund, because let's say if you are buying a house with your spouse, you are both qualified for one amount, that is $4,000. Let's say if one person, they already have a house, and one person is a first time home buyer, then they deduct 50% of it. Means like you will get only $2,000, so you will not get $4,000. And if you're buying with another partner, if you both are first time home buyers, then again you will get maximum $4,000, and then you divide like $2,000 each. So it doesn't mean like, let's say if me and my friend we both are buying first time, and then it doesn't mean like we're gonna both get each $4,000. It's gonna be $4,000 total together, and then we just get $2,000 each.
$2,000 each.
Yeah.
Yes.
So just make sure like you use that credit smartly.
Yes,
right?
And also if you wanted to add on, let's suppose if you are a first-time home buyer and your partner is not, and in that case, don't expect that you're going to have $4,000 in return.
Yeah.
Right? So
Yeah.
it's going to be $2,000 into your account.
Yes, it's $2,000, not $4,000. So just wanted to make clear, because the other day somebody asked me about that question, and then I just wanted to make sure that I answer that one.
There you go.
And last one is, guys, GST and HST. So in Ontario or any other province, when you do a transaction, you pay HST and HST on the transaction sales tax, right? So what government says in this program, let's say for a first time home buyer, if you're buying your first house, especially like before 2007, it was only qualified for new houses, but after December 2007, they now can buy either new house or resale, and so how does the HST GST work on that part? Like, let's say if you are going to buy the house and you're first time home buyer, so what government says that you can get the GST HST, some amount of GST and some amount of federal HST amount, you can get a rebate back. Depends how much you make, and that sort of criteria needs to be met, and so you can get that claim. So how does it work? If you're doing a heavy renovation, you put up a new kitchen, you put up the flooring in a whole house, you put up another bedroom, so then you can qualify up to 90% of that GST HST rebate. But make sure, like, guys, they want to make sure, like, it's not just, you just put the kitchen and then you want to claim for it, but it has to be heavy renovation, means new kitchen, new floor, new bathrooms, and like other like paints and all that sort of stuff, right? Then you can claim 90% of the amount, right? And the more I wanted to discuss on that part, like any house that is detached or bungalow, any semi townhouses, all those houses are qualifying for that. So moving forward, like how much you can get in rebate back, so they have capped it. So they have capped it up to maximum of, let's say if you buy X amount of worth of house, then you can maximum claim for $24,000. This is the maximum they're gonna give you guys. So it's not like if you pay $50,000 in HST GST that you're gonna get everything back. The maximum cap is $24,000. So we kind of have covered pretty much all the topics, all the four programs. But if we have kind of missed off anything, definitely, guys, comment below, reach out to us, we can get back, or just leave in a comment, then so we can help the other people too, so they can read the comments. Anything else? So we
at the final note, I just wanted to say, before going for any of the four programs, you just need to consider the terms and conditions very carefully. So we should not end up having any kind of surprises at the end of the day.
Yes. So
because in the very first program, which I have discussed about the Ontario Housing Incentive Plan, there is the government will provide you a portion of the money into your home by exchanging with the portion of getting their equity or their own ownership stake into that.
Okay, yeah.
So we need to consider a lot of things before we getting into this plans. No doubt they are pretty much attractive. They give us a lot of opportunity to become a home buyer, to become a home owner. But again, we do need to consider a lot of other things before falling into this.
Yes. So we did through, let's say we discussed kind of thoroughly as much as we could, but there's a lot of information online that you can find on our government websites that you can read it through. But I just wanted to follow up because a lot of people, they don't know. Once they kind of wanted to get information, we want to be there to help you guys out with the informations on hand. I know it's going to be about 10-15 minute video. So if you guys watch the full video, and then if you see if there's a value in this video, please do share with somebody else. Make sure you leave a comment, make sure you leave a like on this video, and then if you have somebody who's looking to buy their first house, please do share this video. It's gonna help them as well. And yeah, if you looking to buy a first house, your first house anywhere in Ontario, so please reach out. So I have Sukh's information in the back in the description, and you can reach out myself as well.